Welcome back to Life with DJ Sessions. My MLS number is 271-823. Today's discussion on episode 10, we will be talking about business credit, finance credit, whether you want to call it commercial lending. There's different acronyms out there, but really, I wanted to kind of also go side by side with the presentation. So if you're listening to this on the radio, you can definitely go to the YouTube channel and watch the actual presentation as well. So I'll just kind of jump right in because this topic, it is going to be a two-part topic, and mainly because two-episode topic, because there's just so much information to unpack. And really, my goal here is just to increase your understanding of what it takes to get financing for business use. Okay. So some of the questions that are asked, right, is, what does your business do? Um, what kind of loan or even an equity injection? Anytime you see the word loan or loan, it could be, flipped by doing an equity position if someone's buying equity in your company. So you can interchange that. And I know there's some other nuances to that, but I'm just keeping it all simple. How's your business organized? Is it just you, right? Or do you have multiple people? How long have you been in business? Who are the key employees, right? Detail any reasons for any negative trends. Tell me if your company has a succession plan. Again, how's your personal credit? Um, how much cash do you have on hand? And will there be any collateral? So this is kind of top level. We're going to get really deep into the weeds here. So we want to really start off by just saying how is a business defined? What is a business, right? Well, business is defined as an occupation in which individuals risk an investment in order to produce a good or perform a service in the expectation of gaining a profit, right? If you're just doing it because you like baking cakes, you really don't care to make a profit. You may not have a business, you have a hobby, right? It's not a bad thing, but really what we're talking about here is a business. We also just want to do a quick little credit score range. This is just so people, again, just have a base understanding of kind of what the percentages are out there. Many people have seen this before. I have another chart here. I just kind of always like to point out, that there's definitely some work that needs to be done on this. And I had discussed about your road to 800 credit score. So definitely go check out that episode. You definitely want to get a business credit profile. And this is something through the Dun and Bradstreet. Some people are familiar with this, but definitely get a DUNS number. It's a worldwide standard for business classification. In some cases, you'll actually need the DUNS number to even do business with the government. I know I talked about before in another episode about having your A team. One thing to keep in mind when you're talking about any type of business or commercial credit, there are certain covenants that need to be held, debt service cover ratio, certain financial statements and liquidity has to stay in place, which is sometimes different for other type of financing out there. So that's why that's worth mentioning. You definitely want to communicate any type of challenges, but also on, how to communicate agreements that you may have. And when I'm talking about who you're communicating this with, whether it's other, equity partners or a lending institution looking to borrow, lend you the money. And then, and that challenges or agreements are centered around the business and industry cycles, right? If your business typically peaks in the spring or fall, that's an understanding of an agreement of what your business does. And then, any type of institution is going to have some sort of lending committee. And so sometimes it's, having that conversation with what the lending committee's appetite is for, right? So we're going to go a little deeper here. So what are the 5 C's of lending, right? You've got your capacity, which is really your ability to repay, the character, your actions and history, capital, your personal investment, collateral, your pledged assets, and conditions, your world, and the world around you. And again, I'm going to go into these a little deeper. So capacity, well, how much money are you making, right? How much money is the business making? Will you make enough to even repay the loan as agreed, right? Or if you're in equity position, is there enough money to pay me a percentage of what I'm interested in? Will the business make that? And then will you also have enough money to live on, right? what's your character like? Have you repaid loans? I mean, I know credit kind of centers around character, but have you repaid other loans as agreed? Do you have a good reputation? Are you honest and trustworthy? What is your education and experience? Again, this is centered around your business, your expertise. Um, how much of the business do you actually own? Right. Sometimes you could be in a position where you've maybe sold a lot of the shares or ownership early on, and now you're trying to raise money or borrow money, and you may have to get other partners involved. Are you investing any of your own money? And then do you have anything to lose if the business fails? Collateral, are you buying anything with the loan? So maybe you need the money to actually purchase a collateral, a building, or some sort of income producing asset. Does the business own anything already? Maybe you already own properties. Maybe that's in the business name that's used as collateral. Are you willing to put any of your personal possessions on the line? And this is a great example of, you'll find that, hey, I want to borrow money for my business, but maybe I have a ton of equity in my home. I'll use my personal home as collateral for the loan. And conditions, why do you need the loan, right? Are you in a position where you need a loan, or even an equity partner? Are people buying what you're selling? Who are your competitors? What's happening in your industry, and what's happening in your personal life, right? These are all things to consider. And so when you talk about a business and why that's important is, right, what is the likelihood of your business to succeed, right? This is a chart that, goes over a 15-year span, but, and after the first year, 20% of businesses fail. 2 years, you're talking 40%, right? And then you can kind of see there, but if you go past, I think it's 5 to 6 years, you can see the longevity that really sticks in there, right? And so typically when you're looking to borrow money from your business, or really money in a business, in the beginning, it shows here. And this is kind of from the beginning, and then over time, you're starting with your own, whether it's a private loan, personal lines of credit cards, micro loans and angel investing. You go to VC, venture capital. Sometimes typically you don't use, sometimes in some cases you don't go to the bank until you've maybe exhausted other avenues. And then you could get to a point where you may want to do kind of a public stock sale. What's the number one reasons why businesses fail? There's no market need, right? You create a product that the market just simply doesn't need. The second is they run out of cash. They have maybe a great idea. They maybe had a spark when they started, but you got to keep it going. And then in some cases, another competitor picks up and says, "Hey, that's a great idea. I'm going to go ahead and do that too." So, this information's out there. One thing to consider too, and I'm sure this isn't news to anyone, but the generational shifts, right? You got and this was 2017. We know, it's later now, but you still get the gist of it, where you've got the folks over 70 years old, you've got the baby boomers, right? And that 55 up age, generation X, that's me. You got your millennials, my children, and well, one of them, and then you got Gen Zers and other children. So you've got the Gen Zers, and you can see more than half the population, or half the population, is millennials and Gen Zers. So that's just something to always consider. And so again, one of the things you talk about when you're talking about a business financing and talking about a business in general is a question to be asked is, well, what's your business canvas look like, right? Who are your key partners, right? Key administrators. And I don't have to go through each one of these, but you can kind of see there that these are some exercises that you may want to already know in regards to your business when you're looking, again, seeking financing for your business, financing to grow your business. This is a cap rate. One of the things that, when you talk about real estate, a lot of real estate conversations going on is, how do you calculate cap rate, right? And it's simply the annual operating income divided by the value or cost of an actual asset itself. And you can see there's an example, on this particular one. If the property is listed for $1 million, generates net operating income of $100,000, and the cap rate would be $100,000 divided into $1 million, which would be 10% cap. I know, rule of thumb, they say 7% is kind of nothing worth. 7%, is kind of the rule of thumb. But I know people who do cap rate deals in the fours, and you can take that and really cap rate centered around rental income, investment, kind of that passive income. It's definitely something to make sure you're mindful of. And we'll go ahead and stop here simply because there's a lot more information that I want to kind of go into. But again, this has been another episode of Lessons in Financial Empowerment. I'm your host, DJ Sessions. And again, thank you. Have a good day.